What's up, guys? Monero Mateo. How you guys doing? Welcome to my channel. Welcome to the video. A couple housekeeping things first. Thank you guys so much for the comments that you've been putting on the videos over the last week or so. I've got to know a couple of you guys, Josh, Rick. There's some other people who have recommended videos. I'll get to that later this week. And I've really enjoyed talking with you guys. I've learned some things. I've got to deep dive on some topics that you guys have brought up to me. And it's been great. It's been great. The likes have been great. We're moving up in the algorithms. More people are finding the channel. More people are finding our content. And this is wonderful, right? So even if you leave a not-so-nice comment, which somebody did on one of our videos, they're like, you're a shill for Pirate Chain. And I'm like, yeah, I don't think so. I think Pirate Chain is awesome. But why would you think that? Why would you think I'm shilling for Pirate Chain? Because he called it a scam. Let me know what you guys think about Pirate Chain. I think it's great. It's a private cryptocurrency. I think it's certainly better than Bitcoin. But, if you guys have some comments on that, I'd love to hear them. Yeah, we're going to talk today about the OG privacy coins, gold, silver. Some of these coins are not on the radars. Interestingly enough, for a lot of our crypto friends, they're all in on crypto, but I would take another look at that because I think these things are going to go up significantly in value. And guys, by the way, there is no more private cryptocurrency, or let me edit myself. There's no more of a private, words, come to mouth. There's no more of a private currency than there is gold and silver. You can bury it in your backyard. Nobody knows it's there. You can put it in a vault in your house. Nobody knows it's there. Feed it to your tea. Nobody knows it's there, right? That's sort of cartelish, but don't do that. These are private currencies that the government can never find unless they come to your house, Saudi Arabia style, to go look for it. But we love gold. We love silver. They're God's money at the end of the day. And I'm not one of these, cryptocurrency is going to be it. It's our only chance against the bankers. Or gold and silver, precious metals, are going to be our only hope against the bankers. If you want to know what I think that the greatest currency of all right now is Monero. I'm Monero Mateo. I love Monero. And then next, I would say silver. Then I would say gold. And then I'd say Bitcoin or one of these other cryptocurrencies. Bitcoin is much further down on the list because let me tell you what, I've learned a lot about Bitcoin over the last week or so, and there are some very daunting things about it that we're going to talk about later this week. And I don't think a lot of people are aware of some of the problems with Bitcoin. And I was suspicious when I saw Jack Dorsey get into it, Elon Musk, and when I saw CNBC talking about it every single day, I started to think to myself, why are they being so friendly towards Bitcoin? Because as we're going to talk about later in this article, central banks and the elites, they don't want you to have freedom in your money. They don't want you to be out of their financial system. And their financial system is a system of bondage. And that's what QE is all about. It's all about extracting through inflation wealth from the bottom 90% of the population and bringing it to the top through the inflation of capital assets, real estate, stocks, bonds, which all the rich people hold. And it's all about bleeding out the population and creating a neo-feudal society. That's what this is all about. And so if gold starts to take off, silver starts to take off, some of these other cryptocurrencies, which grant people financial freedom to trade with each other without any medium like a bank, they're not going to like that at all. And you should anticipate them cracking down on it, which is why we've gone into privacy coins, which is why we like gold and silver, because we hold it. I mean, if you don't hold it, you don't own it. That's what I think. And you also don't want people to see that you're holding it, mind you, which is also another problem with Bitcoin. But today I wanted to talk about some manipulation which is going on in the gold market. I'd mentioned this in another video before, how gold and silver are significantly manipulated to the downside, which to me is great because it's sort of like holding a balloon underwater. Like the deeper that you hold that balloon because of artificial manipulation to the downside, the more pressure there is under it. So for when the pressure, the top-down pressure is released, it's going to go that much higher into the air. It's going to skyrocket that much more. And so I love things which are manipulated to the downside, especially in an economy, in a financial situation where everything is manipulated to the upside. Real estate, stocks, bonds, all the stuff is based on cheap, crappy debt, which we went over in our $1 trillion video. This is where trillions of dollars of capital is going to flow in. I'll link that into the top right of the video. But yeah, there's going to be tremendous capital moving into here. And when there's price discovery and the paper derivatives markets collapse, and if you guys want to learn more about that, go to Craig Hemke at TF Metals. Go check out Wall Street Silver. They talk about this stuff all the time. They go into a lot of detail. It's great. But when that stuff collapses, these things are going to skyrocket in value. And that's going to be fantastic, except a lot of these manufacturers which use these things are not going to be able to source the silver, and so that's going to lead to more inflation problems, which is going to be even better for silver, and then it's just going to cycle out of control. So let's get to the manipulation so that you guys can understand sort of where I'm coming from. This is a post off Zero Hedge. Gold flash crashes by almost $100, which is a lot because the market cap of gold is about $10 trillion. So for it to go down, well, it was about 7 or 1,800 before, and so a decline of that, 1/18th of the market cap. So that's a big move, right? So $4 billion in sell orders hit at the same time, just a market order. In the volume void that follows the resumption of futures trading, in which saw U.S. futures trade modestly lower, a sudden burst of selling in the gold futures contracts sent gold futures as low as $1,677, or almost $100 lower from the Friday close. So there are certain times of the day when you don't have a lot of liquidity. You don't have a lot of contracts trading hands. You don't have a lot of people buying and selling. And so to do anything at that point in the market is going to significantly increase price or decrease price, impact price, because you don't have a lot of people who are going to buy it on the way down or buy it or sell it on the way up, right? So that's going to create much more volatility. And we see this in small cap cryptocurrencies, right? So like if it's a small cap cryptocurrency and there's not a lot of buying or selling going on, if somebody wants to seriously nuke the price, all they would have to do is do what these people did here. Just put a sell order in for whatever people are asking for it, or whatever people are bidding for it, and then boom, it just collapses. There's no one to come to the rescue and bid it back up. It just goes down. So together with Friday's post-payroll plunge, this has been the second biggest drop in gold since the March 2020 crash. Significant move. However, unlike Friday when gold moved in response to the spike in the dollar and surge in yields, there was no offsetting move in any securities after the futures opened when over $4 billion or some 24,000 contracts hit the market. So if you're a trader, think about this. There's something called a market order where you just sell something onto the market and you will take whatever it is people will bid for it. Now, if you are a bank or if you're somebody with a profit motive at the end of the day, just why would you do that? Especially when you're selling a lot of something which can impact the price. Because these people are losing money all the way down. Because that's going to be bid up at some point. Nothing just falls like that. If something is falling in a market, typically you have dead cat bounces. Things go up a little bit and then go down, go up and go down. Look at a chart of the Great Depression of the Dow. That'll show you what I'm talking about. But when you look at this, you know that there's no profit incentive there. There's no profit motive. What you're trying to do is influence the price, which is indicative of manipulation. So 24,000 contracts were suddenly and furiously dumped in a completely price indiscriminate manner, whose apparent intention was to nuke the entire bid stack. While there was no news or even pair trade correlation catalyst behind the move, technicians have noted a death cross alongside a technical breach, which triggered liquidation. Right. So it could be algorithms, but even then, something in the algorithm would tell you to buy at a certain point. So let's go here. Let's look into more technicals. Look at these candles. Yep, look at the volume. Blatant spoofing that the CFTC ignores, which is the Commodities Future Trading Commission, which is the authority on commodities trading in the market. This exact behavior has been the topic of criminal investigations before, which we'll get into later in this video. So we're looking again at the 10-year inverse yield. We went through this on the video earlier last week. Trillions of dollars of capitals move into these assets. And so you already saw a divergence. You already saw gold lagging in correlation to the inverse 10-year real yield. And we already know the 10-year real yield is significantly lower than negative 1.2. It moved up a little bit when futures opened today, but we know the real yield is way lower. Now, Deutsche Bank is saying that it's as low as negative 4.15. We said in our video it's below negative 10%. Because if you take into account the inflation that's going on in rent, the inflation that's going on with shrinkflation, which isn't factored into CPI, where the amount of goods that you're getting is less than it was maybe a couple weeks ago, yet the price is the same, that is inflation. You're paying more for the same amount of goods. And you look at other things going on in the market, used prices, coffee, used cars. These that indicates inflation is 15 to 20%. And so if inflation is 15 to 20%, but the yield on the 10-year treasury is 1.3%, I think is what I saw it at. I mean, that's significantly, significantly negative. And so if gold could go up to $2,075 according to this chart, with the real yield on the 10-year being negative 1.2, imagine what it could go to with the real yield being negative 10. I mean, it would go nuclear. I mean, it would go up to like maybe $10,000 an ounce. Crazy stuff. So we're going to go through this article and we're going to identify why it is they're trying to manipulate gold and silver to the downside. And remember, they're trying to manipulate silver especially to the downside because it is used in industrial commodities. It's not just an indication of inflation. It is also used in the manufacture of a lot of goods by a lot of the bigger corporations in the country. You need silver to manufacture iPhones. You need silver to manufacture Teslas and cars. You need silver for electrical conductivity. It is the most conductive commodity there is, even more conductive than copper. But copper is the status quo for conductive stuff because it's much cheaper than silver. But it's necessary. And if the price of silver starts to go up, then the price of a lot of these electronics and other things in the world, they'll go up in price too, which will factor into inflation, which makes people buy silver, which makes it more expensive to manufacture. And then you get this loop where silver takes off and inflation really takes off with it. So central banks have a long and well-documented history of gold price manipulation, which shouldn't be a surprise to anyone considering their history of manipulation with all other financial markets. Let me just make sure I'm recording. Okay, cool. However, gold is to central banks like kryptonite is to Superman. They can't ignore it, so they must attempt to control it. They are terrified of it, but in awe of it at the same time. They are terrified because it serves as a public and accurate inflation barometer, as well as an excellent indicator of the relative strength of fiat currencies. Right, so it's an inflation barometer. And we know how much they influence CPI. We already know how much they try to choke CPI from being able to realize its actual metric. And they've changed the calculation on CPI dozens of times since the 80s. And if you use the 80s calculation of CPI, inflation is over 10%. And, CPI doesn't measure in shrinkflation and other things we talked about. So at this point, it's about 5.6%, which is as high as it's been in the 70s. But if it were to really measure inflation, that would be bad. That'd be bad for the narrative. The central banks wouldn't be able to justify continuing to print all the money that they are. And so they would need to taper their balance sheet. They would need to increase interest rates, which would make stocks crash, bonds crash, real estate markets crash. And as this market talks about here, with real yields at what is basically all-time lows, any attempt to push them higher will lead to a collapse of the financial system. Positive U.S. real yields for any length of time would likely set off a debt crisis around the world, so we are probably stuck with the regime until. So that's worthy to note. And the reason you'd want to own gold and silver as an inflation hedge is because there's no yield on them. And if you've got trillions upon trillions of dollars of bonds yielding negative, there's going to be an incredible incentive to go into gold or silver. And a lot of these stocks, which are dividend stocks, they're yielding real terms negative too. You're hoping for capital gains. You're hoping that a lot of the money that the Fed prints will go into these stocks and give you capital gains. And same thing with the bonds. And so, that's a problem. And a lot of these growth stocks like Tesla, they don't even have a dividend, so you're totally gaining. You're totally banking on the gains. But they are in awe of it because of its importance as a reserve asset, as well as its value and power within the international monetary system, which is undeniable, universal, and like it or not, in control. Nevertheless, for their own sake, these two are critical factors that central banks have an overwhelming desire and need to attempt to control. Right, so let's just keep going. In March of 1968, the U.S. Treasury triggered the move to free market gold when they ran out of good delivery gold, which I suspect is going to happen at some point in the future, which is going to collapse the paper derivatives market and really send gold and silver soaring. Through the 60s, a consortium of central banks from Western Europe held gold prices at or near $35 an ounce by coordinating their operation through the Bank of International Settlements and utilizing the Bank of England as a transfer agent. Once the price of gold was quote-unquote released in the 70s, central bank price suppression and demonetization efforts continued. And demonetization efforts, if you've been through college, if you've been through economics classes recently at your high school or something like that, and you're watching this video, I want you to comment, do they teach you that gold is money? Do they teach you anything about the gold standard that was in place before 1971? Nobody is educated on gold. Nobody is educated as to what real money even is in a lot of these economic and financial classes. That is part of this demonetization effort, I would imagine, because if people really knew the dynamics at play here, people would be going out and buying physical gold and silver hand over fist. And they'd be buying Monero, of course. But that is up to us to educate people about, requiring the occasional dumping of physical gold, which is what we just saw, back into the market in order to squelch rising prices. Consortium meetings were not publicized at the time, but the Bank of England archives now contain public records of those meetings. Right. A review of those meetings records clearly indicate the contempt that central bank members felt toward a freely functioning and in control gold market. And let me just make an edit here. A freely functioning and in control currency, free market currency, which is why this puts into context everything that we're seeing the world over with the crackdown on cryptocurrency. Look at what's going on in the Senate with Janet Yellen, the Treasury Secretary, who is once the head of the central bank, the Federal Reserve, lobbying to push this Warner Amendment, which would make many people into brokers, which is what we talked about in previous videos. We're not going to go over all that, but they're making their move on cryptocurrency. They're trying to crack down on cryptocurrency. And as I said, if they cannot judo flip Bitcoin and a lot of these popular cryptocurrencies into their domain, into their weapon system, I guess you could say, into their system, as being a way to surveil the population, have financial leverage over the population, and to ultimately control the population, they're going to regulate and tax it out of existence. That's the situation. And a lot of people in crypto just are naive of this. Maybe they just have the laser eyes blinding them too much to what's actually happening. But this is the reality. And this is why I don't think, well, we'll get to that later. Record comments from these meetings include there is a need to break the psychology of the market, which is what dumping the gold price is all about, because that disincentivizes people to invest. And if you start to sense that a market is manipulated, you're not going to want to go into that market. And even if the fundamentals are there, you're going to want to go into Tesla. You're going to want to go into Bitcoin. You're going to want to go into these other assets which you see yields in. And even though you know gold and silver are the place to be, even though you know they should be at a way higher price according to fundamentals, which we'll look at later, yeah, I mean, that's not going to really incentivize you to get into these things because, especially in this instant gratification market now and the society generally, people want their gains now, right? So, smashing the price down definitely incentivizes that. That's why it took Bitcoin so long to recover after 2017. People stopped talking about it. People lost interest, even though it was, at least back in the day, the currency that was going to save the world. Once the gains were gone, people were like, oh, I don't care about this anymore. I'm going to buy Tesla. And so they did. So, no question of any permanent stabilization of the gold price, merely at a critical time, holding it within a target area, manipulating the market, and to stabilize the price within a moving band. And it would be easy and nice for central banks to force the price down hard and quickly, which they've done year after year after year for a long time. Look up the London gold fix, the London gold pool. This has been going on for a long time. Out in the open, I'd mind you. Most meetings were shrouded in secrecy at the time, but the activities that followed were predictable and consistent. Even Alan Greenspan, Federal Reserve Chairman at the time, testifying before the U.S. Congress in 1998, admitted central banks stand ready to lease gold in increasing quantities should the price rise. Just outward manipulation. The gold leasing market, primarily based in London, was and remains a covert business affair that empowers central banks to manipulate the price of gold. Likewise, many central banks lent out gold long ago and hold nothing more than gold receivable on their balance sheet. So, Venezuela has been trying to get their gold back from the Central Bank of England, and they're not giving it up. Now, could it be because they don't have the gold? Or is it because Venezuela is a failed rogue state? According to them, who knows? But yeah, we don't know how much gold they actually have. And we don't know what's going on. In Fort Knox, as far as I'm concerned, there hasn't been an audit there for a very, very long time. Some people say the last audit that we can see was from 1957. But yeah, there has been consistent attempts to audit Fort Knox as far as I could tell. And nobody can get them. Nobody knows how much gold is in there. And Steve Mnuchin, a few years ago, he went to Fort Knox on a trip to hold up some freshly printed money or something like that with his trophy wife. And he was like, yeah, gold's all there. Don't worry about it. Yeah, it's just like gold's all there. Did we ask you if the gold was there? I don't know. But yeah, it's interesting. We don't really know what we have. We don't know how much gold we have. And the liability can be rolled over and over and over, and central bank gold is never independently audited. Right. I think the only partial audit we got was with Ron Paul back in, I think, 2008, but we didn't get a full audit. And there has been attempts to audit the central bank, but they never really go through because they're an independent agency. They are a private company. They're not even part of the government. They're like Fannie Mae, Freddie Mac. They're like a government-sponsored organization, but ultimately they're private. Nobody even knows who owns them. Central banks go to great length to make sure that the market does not know the true status of outstanding gold lending and swapped gold positions. So just a lot of chicanery going on in the gold market. And here is some evidence of gold manipulation. Some people have been caught. Mostly it's lower-level guys who can be kind of fed to the market, which wants blood for what's happened over the last 10 years in the gold market, where gold has basically gone nowhere. And it's institutionalized, as you're about to see. We first brought to you the fascinating story of Deutsche Bank's gold spoofer David Liu back in 2017 when we first revealed that the former precious metals trader turned government star informant was responsible for busting a massive ring of gold manipulators that resulted in numerous arrests and multi-million-dollar penalties paid by banks, including Deutsche Bank, UBS, HSBC. So this is just more criminal chicanery which happens, and we talked about this in our video with Fluffy Pony to expose the hypocrisy as to how people in the crypto market are treated versus banksters when it comes to money laundering stuff and AML and know your customer things. And a lot of people in the crypto community will go to jail, but these banks, which launder money literally for cartels, like HSBC was convicted for laundering money for the Sinaloa cartel. Insane. And all they have to do is pay a little fine and nobody goes to jail. And this happens bank after bank after bank. Same thing here. Nobody ever goes to jail except for like some low-level guys that go to jail for a little bit. One guy in court basically said, yeah, this is commonplace. It happens all the time. My manager said it was okay. The bosses actually incentivized us to do it. And yet he's the only one who goes to jail. He's like a sacrifice of sorts. For those who need a refresher, read Deutsche Bank Trader admits rigging precious metals markets. And yeah, the fix, dude. You guys were the silver market. He's talking. This is a conversation between a Deutsche Bank trader and UBS trader working together to manipulate the silver markets. Yep. Yeah, so you can read more about this stuff here. And yeah, just more stuff here. I F the markets around a lot. Monero Gold Traders chat exposes how easy it is to manipulate the metals markets. They did it, quote unquote, over and over again. They took pride in their skill to manipulate the prices. They took pride in ripping off other traders. They bragged about it. Yep. Yep. So this has happened for quite a long time. And so look at all these different instances. Gold manipulators busted. After Zero Hedge reports on flagrant gold spoofing, gold manipulation, spoofing futures, and banging fixes. Same banks, same trading desks. Fed cracked down on traders spoofing to manipulate prices amid record number of cases. Yeah, so a lot of manipulation. And so I just wanted to give sort of the bullish case for commodities and for gold and silver to wrap this stuff up. I think this is interesting. If you think it's interesting, give me a like, give me a subscription, and share the video if you think it's that interesting. I would entice you to do that. This is very important information. Criminality going on a large scale, and it's sort of reminiscent to what happened in 2008 when there was a bunch of criminality happening in regards to the mortgage lending market and the securitization of those bonds into assets which were totally worthless and sold all around the world, which created a global financial crisis. And some people saw this, like Peter Schiff, and there's a lot of money to be made. And Peter Schiff is well aware of what's happening in the paper derivatives markets of gold and silver. He commented a lot about it when it came to the silver short squeeze sponsored by Reddit and Wall Street Silver back beginning this year. And so as much as crypto people hate on Peter Schiff, he's going to do quite well when all this stuff works out. I do, again, wish, though, he would work on his education regarding the blockchain. Now, unfortunately, it's because I think Bitcoin got so popular that he's turned off to cryptocurrency altogether. Now, if it was Monero, I think he would be a little bit more enticed. Because Monero is actually fungible. Bitcoin is not. Monero transactions can't be censored. Bitcoin transactions can and are actively being censored right now. There are certain, well, we won't go into that. That's for another video. So let's just take a look at this. Commodities to equities ratio versus inflation. So look at that divergence there. And something else I want you guys to check out, the commodities to S&P ratio. It's at a low, going back for quite a while. I think this is an all-time low. And even though we've gotten a little bit of a push over the last few months in commodities, it's nowhere near, I think, what's going to be happening. And yes, I think the S&P is going to significantly decline in value at some point when inflation takes off, because growth stocks are going to look absolutely terrible, especially because they don't yield anything. And so you're relying on continual capital gains, which are ridiculous in relation to the underlying elements of the company. Like Tesla, I would estimate, is overvalued like 30x. Some people go up to like 100x. A lot of stuff that's overvalued. in this market. But commodities aren't. They're significantly undervalued. And when these commodities begin to take off, that's going to cause even more inflation problems. So that's just something for you to look at for your edification. I'm not enticing you to make any financial decisions. I'm not a financial professional. Okay, so just take a look at this stuff. I think this is interesting. Precious metals miners, free cash flow, yield spread. So there's a lot of free cash flow now in the gold and silver miners. And so they're out there making deals. They can buy back their stock if things get sketchy, if there's more manipulation in the market and their share value goes down. They've got the free cash flow in order to purchase more of their stock back in order to try to keep the price up. And yeah, things are looking pretty good, right? And if you look at the free cash flow for companies like Tesla and Netflix, and it's just atrocious. I mean, the only thing holding them up is, massive retail participation. It's all speculation. So as for me, just my personal opinion, I think gold and silver have a lot of room to run. And if you take a look at the inflation-adjusted high for silver back in 1980, the high for silver was like, well, let me just go full screen here. There's nothing more to look at. Okay, we'll just drag it out. Hey, so the high for inflation-adjusted silver was like $400, $500 in 1980. And, I mean, it was $50 back in 1980. You account for the devaluation of the dollar that's happened since then. Yeah, it's like $300, $400. And I know some people who think silver is going to go up to $1,000 an ounce. Jesse, I'm looking at you. I think it could go up to a few $100s an ounce. And I always like when people take a look. Well, we won't pull that up now. I pulled it up in the previous video about trillions of dollars of capital moving into these assets. We looked at the dollar to silver ratio, which is at like $4,000 an ounce. And we looked at the gold to dollar ratio, which put gold at like $20,000 an ounce. So I think these assets are significantly undervalued. The thing I love about them most, though, is that it's value which is private, and we love privacy here on this channel. And I'm not shilling for gold and silver. I mean, these are incredible assets. They're God's money. They have many use cases, and I think there's a lot of value there. And even if you are a cryptocurrency maximalist, it's interesting to note stuff about this, because to look at how much they've tried to prevent gold and silver being, freely floated into the market that isn't under their thumb, I think that's worthy to take note of in regards to cryptocurrency. I don't think they're going to be so lenient on cryptocurrency, and I think that if they are, you ought to be suspicious. And looking at CNBC, looking at Jack Dorsey and Elon Musk's participation in all this makes me suspicious of Bitcoin. And I think you guys should be suspicious of Bitcoin too. I mean, you could track and trace every transaction. Imagine going to a bank. You had just transacted with somebody and you said, hey, this person I just transacted with, would you mind giving me all of their financial records? Would you mind telling me how much money is in their bank account? Would you mind telling me who it is they're transacting with, for how much and for what? And that's ridiculous. And the bank's saying, yes, absolutely, sure. I mean, that's what Bitcoin is. That is what Bitcoin is, and that's why we love Monero. That's why we love Pirate Chain and some of these other cryptocurrencies. So comment your favorite cryptocurrency. Comment what you think about gold and silver. I'd love to hear from you. And we've got more videos coming this week. Again, this is Monero Matteo. Thank you for tuning in. Follow me on Gab and Twitter. I've made videos on Rumble and Odyssey. Odyssey is a great platform. If you haven't followed me there, go follow me there, please. I don't know how long I'm going to be on YouTube. I have no strikes yet, which is fantastic. YouTube, please don't ban me. But I try to watch the language, and I try to watch how it is I talk about certain things. So, yeah, just some content for you guys here. Come back tomorrow. We'll have another video then. God bless. Have a great day.